All right, guys, welcome. Today we're going to be talking about investments and the stock market and why I started getting into it at 18. I'm almost 21 now, so I do have a little bit of time and experience with it. Of course, there are plenty of people out there that have much more time and experience and are actually professionals with this. But the point of this video is for starters, for people that want to learn things without getting in over their heads, without hearing all sorts of advice that doesn't really make sense to them.
Just keep in mind that I'm not a financial advisor. I create these videos just for educational purposes. You're responsible for your own investments and decision that you make, but this is just my opinions and the way I've gone about things.
Because it can be very confusing and everybody has to start somewhere. So, when you're 18, like I was trying to learn about it, there's a lot of info out there that just doesn't make sense and you need it to be simple. You need some solid advice to follow that you can actually understand. So that's what I'm going to try to do in this video, where to start, how to start, and kind of where to go from there. So with that being said, sorry about the lighting. It's a little bit darker over here just because it's nighttime outside. I'm going to try to get better lighting soon. But if you guys do enjoy, please do drop a like and subscribe. There will be plenty more videos in the future. You won't want to miss them. But let's jump into this. Now, there's a lot of things to talk about, but the simple question is, what brokerage do you use to start? And by brokerage, I mean, where are you going to be buying these stocks? Where are you going to be selling them? Where are you going to be holding them? Where are you going to go through to do that? And there's a lot of different systems out there, but the one that a lot of people are using lately and that I use still is called Robinhood. And it's actually an app on your phone. And what's amazing about it is they have zero commission trades. And if you guys don't know what that means, is basically if you want to purchase a share of Microsoft, that might cost about $185 right now. You might have to pay a $5 fee on that and other services. But with Robinhood, you don't have to pay a fee. The way it's structured is so that you actually don't have to pay any fees. Now that might sound a little bit weird because you think, well, how could they get away with it? It's just a new way of formatting things. And a lot of brokerages are actually starting to follow suit with this because it's kind of just something that they've gotten away with for a while. And now that more and more people are doing it, it's kind of starting to switch over to be commission free, so you don't have to worry about paying extra, which is great from Robinhood. Now, not only that, if you guys do use a referral code, like the one I put in the description down below, if you use that link, you actually get a free share of a random company, and I will as well. Now, I'm not kidding when I say this, guys. When my girlfriend did this, she literally got Apple. She got it when it was worth $170. She's held on to it, and it's now worth like $320. The one I got, Chesapeake Energy, for $3. So you might not get a share of something big, but you could get Apple with something like that. So that's why Robinhood is good. It gives you kind of something to play with at the beginning. Say you don't want to dump a bunch of money into it. Maybe you just want to test the waters with one simple share, and they'll actually provide it to you if you guys use the referral code in the description. So that's why Robinhood is great. It kind of is a good way to segue into everything, start learning, start experimenting with it. You don't have to worry about losing money on commission, and you don't have to even really purchase a share at the very beginning. You'll get one to play around with. Maybe you'll hit it lucky and get Apple or something like my girlfriend, but that's why Robinhood is great. So absolutely, for everybody that's beginning, Robinhood is the way to go. No questions about it. Now, one of the other things that you'll think about is kind of why you would want to invest. If you're thinking, I only have $200, why would I be starting now? Is that really enough to start with? And the simple answer is yes, it's always going to be enough. And it's always a good time to start investing because, so many variables are against you if you're just holding cash with nothing else, right? You have inflation. So your $100 in a year is going to be worth less than it is today. It's literally going to be worth probably, $99, $98, $97. That's just how it works. And not only that, if you are holding on to that 100, even if you're considering for zero inflation, which is impossible, it'll always be worth less later. But let's just say zero inflation. Would you rather have $100 or would you rather have $103 by investing it on the stock market? It adds up over time. And if you think about that over and over, years through years, if you start at 20 years old with $100 and you have $103 next year, well, that $103 will earn just a little bit more than the 100 did. And then that 103, whatever you earn then, earns a little bit more. It adds up. That's the whole point of why people are telling you, start investing young, because that's what happens. If you go to financial calculators online and you type in, my investments go up by 5% each year, how much will I have in 10 years? Might be a small amount. 20 years, way bigger. 30 years, and then you'll be blown away at just how much it multiplies, just because more money makes more money makes more money. And that's just the name of the game. If you have more money in the stock market, you'll be able to make more money. That's why a lot of people that are super rich are able to do things like invest money and live off dividends. So yes, $100, $200, $300, you can always start with whatever you want. You can even start with $20 and invest in Snapchat. That's not exactly the best piece of advice. I probably wouldn't do that with my 20 bucks, but you can absolutely start with anything and anywhere you want. Now, the next thing that you'll be probably wondering is you'll hear about things like dividends and what exactly that means. Dividends is basically what the company will pay in a certain time frame based on the earnings of the company. So for instance, if Microsoft is doing well and in the last quarter they made a certain amount of money, if you have one share of Microsoft, you might get 30 cents back for that quarter. And then the next quarter, if they do a little bit better, you might get 35 cents. Now, every company is a little bit different. Some companies don't offer dividends at all, which means your value is simply what the share price is. You don't get money back at any point until you sell it, of course. And then other companies have kind of a set dividend where it's going to be a consistent amount. And then other companies will have variables with changing dividends based on the quarter, based on how they're performing. And most of them are going to be either changing quarter to quarter, depending on how well they're doing, or they just won't give a dividend. Now, don't worry about buying stocks based on that, especially if you have a small amount of money. You don't have to be worrying, but this one doesn't give me a dividend. That's probably not a good one to buy. Don't worry about that, because that's something that really won't accumulate too much money until you have a lot of money invested in the stock market. And that's why rich people can live off dividends, because if you have $1 million in shares of Microsoft, you're going to be getting a lot of money from those dividends, so it adds up. But don't worry about dividends too much. Sure, it's nice to get 20 cents, but it'll add up over time. Don't worry about finding companies that pay dividends at the beginning. You'll just learn more about that as you go, and it's nothing to panic over. Now, a different setting to catch your attention for this point, it's that nothing is guaranteed. You only should put in what you're willing to lose, because anything can happen. You can lose all of your money. Of course, is that likely? Not necessarily, but you need to be willing to be okay with losing whatever you put in. So don't put your life savings in this. Don't put everything you have. Only put in what you're willing to lose. It's unlikely, but it can happen. It has happened before. And, the upside is probably not going to happen. You can probably make a lot, but it can happen. So only invest what you're willing to lose. Now, another thing people talk about a lot is diversification. And you're probably wondering exactly how important that is and what that means when you have $300 to spend. If you have $1,000 to spend, how much can you diversify? How much should I diversify? And of course, everybody's going to be different. You'll have to find what works for you. But in general, that's something you worry about. Again, when you have a lot more money, if you have $500, it can be kind of hard to diversify, and if you believe in a certain company, that's what you want to start with. You want to start with a company you believe in. Don't be buying shares of some food company just because you think you need to buy food sector and you need to have tech sector, the automotive sector. Don't worry too much unless you're starting to build up your portfolio and you want to have a balanced portfolio. It is important, of course, to be balanced. While I don't have $200,000 in my portfolio, I certainly do have still some different stuff in there. I have medical stuff. I have automotive stuff. I have, things like PayPal. And it's important to do that because if something goes down, if a sector takes a hit, you want to be prepared. You want to know that, all your money isn't going to be tanking. You're at least going to still have some stuff that's climbing. And if everything gets hurt, usually something is going to get hurt more. So you want to make sure that you're not losing out on everything. And diversification is definitely important. But if you have $300 and you're thinking, but how can I do that? I got to make sure you have $300. At the end of the day, it's just not too much money, and it's going to be hard to do that. Another thing that I would highly recommend you do is, say you have $1,000 that you want to invest right now. Don't actually invest all that 1,000 right this minute. While the market seems like it can go up and down, that's exactly what it does. It goes up and down. So if you put in 1,000 right now, and you buy it all in, say, one company, let's say AMD, right? They're sitting at about $52 per share. If you buy all $1,000 worth of AMD, and tomorrow they have a bad day, it goes down to $45 a share, which, again, it happens, guys. You're going to be wishing that you just waited one day and bought it all then for $45 a share. That's $7 cheaper than it would have been. And the reason why you want to wait is just because you probably do $200 on your first day. Then maybe wait a week, 2 weeks, do another $200, so that if it drops, good thing you didn't pay all of it, $52. Now you get a little bit cheaper at $45. And then even if it goes back up, $48, okay, well then still it's better than buying all at $52. And then even if it goes to 53, now it's more expensive than the beginning. Well, still, at least you spread it out, so you have at least some cheaper, some more expensive, because that's something that's important. You want to be consistent with the way you put in your money, and it's good to split it up. Now, the next question you might have is, where do I start? What am I buying at the beginning? Say you only have $100 and you don't want to lose it, obviously, and you don't also want to make stupid plays and be holding on to something that you don't really understand. Well, I will first say, do not worry about options. Don't buy calls, don't buy puts. Those are kind of next level trading things. They're not very confusing once you start learning and understanding them, but they're much more dangerous. So just worry about buying shares of a company that you believe in. Really, that's as simple as it is. And that's the best piece of advice, because a lot of people will say, they know this, they know this, they know this. But a lot of it really is just luck. It's a mix of luck and really how solid your beliefs are in a company. So if you believe that Microsoft isn't going to fall off the face of the earth and is going to continue to grow over time, that's what you would want to invest in. That Microsoft is a really well-run company, and I think that they're going to continue to innovate and do great things and expand their business. So that's why I've purchased shares of Microsoft, and it's paid off massively. Over the last 2 years, they've gone up a huge percentage, and I've made a ton of money on that. The market will change. Don't worry about, is it really high right now? Why would I buy it if maybe it's really high? If it's at an all-time high, shouldn't I wait? The thing people always say is time in the market is better than timing the market, and that's for a reason. There's many times where I thought that too. I thought that a year and a half ago with some of this stuff, but I bought in, and you have to ride the wave sometimes. I've actually had times where it dips down and I've lost a little bit of money, but over time, as I've held it, it's been going up, and that doesn't always happen. There could be a recession in 2 years and all your money could be pouring down the drain. It might seem that way, but if you just hold on and you wait for things to correct themselves, the general trend of the market is going to be going up. And that's what you have to be ready to do. You have to be ready to hold on to your investments and not panic when things go wrong, because it will happen. There will be days where the market will drop 5% as a whole, pretty much. Now, one more thing I had a bunch of questions about when I was starting is, if you do change your mind and you own a certain amount of shares, is it bad to say, this isn't what I think is the best option? Can I sell it and buy something else? And you're thinking like, is that actually bad? Am I going to lose money in the middle of it? And the answer is no. If you decide that you're not happy with your investment, you can absolutely sell it and purchase other things. You don't have to be stuck with something forever. And the advice of holding something, is only good for a certain amount of time and a certain amount of companies. If, for instance, you have something that is just going down for 2 years and you have no end in sight, there's no telling that it will always come back up. Like GoPro, for instance, if you look at their chart from the last 5 years, they were trading at $30, $40, $50, and now they're at $5, right? $4. So if you had GoPro at $50 and suddenly you see it's at now 30, and then it's 20, and then a year later it's 10, and a year later it's 5, you might want to make the call at some point. Their future doesn't look good. This is where I need to change my plan. Maybe I want to cash out and reinvest it. You absolutely have that ability, and don't be scared to, because people do that all the time. That's kind of the whole purpose. But there's a fine balance of panicking and also making a smart move by selling things. But there's plenty more things I could talk about, of course, but this video could go on for an hour. With that being said, I can make another video if you guys do want to see that. It's something that I'm quite passionate about. I've been spending a lot of time on lately, and I've been, making different plays lately now that I have more experience with the stock market. So if you guys want to hear more and learn a little bit more, and maybe me show you guys what I've been doing, please do drop a like and comment down below what you want to see in the future, and just if you want to see more in general, because I do have a lot more to say. But as I said, this would go on forever if I just kept talking. So we could break it up into more parts if you guys are interested. Of course, follow me on social media as well. I would appreciate that. It'll be on the screen and in the description down below. And of course, if you guys do want to get started, get a free share of a company, kind of start messing around with things, use my link for Robinhood in the description down below. 100% safe company. There's nothing to worry about. You guys can check the ratings on the App Store. You can do your own research on Robinhood. It's a great place to start, and it's 100% official. It's not any worse, any better than most other brokerages. And for as far as starting places go, it's a very solid place to start. So with that being said, please do subscribe. I would appreciate it. Don't miss those next videos. And other than that, we'll see you guys later. Thanks for watching. Peace.